Hello everyone, thank you for joining us today and welcome to this educational presentation of taking advantage of straight up and or down markets. Now, I know that even though everyone says they love it when the market goes straight up and they're long, or they love it when it goes straight down and they're short, or they're out of the markets, but actually in reality, most people have a very difficult time trading any type of a market, regardless if it's currency pairs, futures, stocks, when it just goes in one direction, because as humans, we like to see order. And when there's just one direction in the market, there's really no order. We don't know how high it will go. We don't know when it will end. There's no give and take or backing and filling because things just keep going in the same direction. So they're very, very difficult to trade. Even though most people will say they love them, in all actuality, only a small percentage of people actually like when a market goes straight up or straight down. For example, let's take a look at this current chart of letter C. Now, this is a very orderly market. We're in a range, and if you like to trade overbought, oversold scenarios, this is a perfect market to trade because it's very orderly. If we have at the very bottom plotted a stochastic oscillator, you can take advantage of overbought, oversold situations. For example, when you see the oscillator go into the so-called oversold area right here, well, that's your indication to buy. And as you can see, right after you would have bought right towards the lows there, look what happened. The market went up. And then when it went up to the so-called overbought area, well, then you simply get out of your long and you sell. Now you can either wait for it to be oversold again or go short if you're more aggressive. If you had sold short, well, guess what? You had a really nice trade to the downside. And then once again, we go into the so-called oversold area. That's your indication to buy, and just like magic, it goes back up again. So I'm sure at this time you're thinking, boy, this is just too easy. So this is why most people in all actuality like orderly markets, because it gives them some type of indication of what to do. Either you're following some type of trading guru, or you're following some type of indicator, or some type of advanced decline line, or even some overbought, oversold situations. There is a certain type of order to that type of trading. Now, here's the only rub. When it gets to a level, as we see here, the oversold, or I should say overbought level again, it's what we call going to the well once too often, because often at times it will just end without warning and continue in one straight direction. As you can see here, look how long we were in the so-called overbought scenario. We just continue to go higher and higher, and all the time the indicator was telling us, well, we're too overbought. We shouldn't be this at these levels. But the stock keeps going up, and you'll see this happening straight down markets. You'll see this happening with currency pairs, futures, intraday trading. It makes no difference, commodities. And so it's very difficult to trade these, but today I'm going to show you a simple way, a very simple but powerful way to actually trade these. And then after a while, you'll see that there's more advantages trading straight up and straight down markets than there are for trading orderly or kind of sideways markets. So this promises to be a great educational presentation. Welcome once again. My name is Steven Primo. I'm the president and founder of Specialist Trading. And as you can see, our entire focus is on educating you as traders. It's been estimated that upwards of 80 to 85% of all traders fail. And we feel it's not because you don't have the perfect system or the perfect trading strategy or the perfect, even the perfect platform. What really matters is that you're not being supplied with the proper information, the proper education that has stood the test of time. Now, I've been trading for 40 years. I started trading on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years, I was a specialist. So that's where we get the name Specialist Trading. I don't want you to think that I'm any more special than anyone else. A specialist was just someone who made markets, or he specialized in about 50 or 60 stocks. If you wanted to buy or sell a particular stock, let's say IBM, you went to the trader or the person who specialized in that. So that's what a specialist did. So I was a specialist during the crash of 1987 and the bull market that followed. So I've seen and traded just about every trading technique, every methodology, every system you can think of. I've been in every market environment you can think of. So in my 40-year career, I know what works in terms of consistency, and I know what doesn't. So that's what we do at Specialist Trading and Pro Trader Strategies. We simply educate all of our members around the world in over 110 countries and in virtually every state in the United States, all the things that I've shown that have stood the test of time. Okay, so we're all about educating you so that you can make your own trading decisions. Now today promises to show you exactly how we do that. We're going to show you exactly how to trade straight up and straight down markets. But before we begin, we are first required by law to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this particular technique in straight up and straight down markets, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So once again, we are required by law to show you this. As you're taking a brief moment to view it, I would also like to take this time to invite each and every one of you, if you haven't done so already, to follow us on Twitter. Every day I post different information, anywhere from little bits of wisdom to actual signals that our strategies have generated. In fact, I talked about a signal that was generated for our Forex members in the Euro Yen. And in just a day and a half, not even actually 2 full days, the signal, strategy signal has generated over 60, close to 70 pips now. So lots of great free information. Feel free to follow us on Twitter. Now, as I stated at the very beginning of this presentation, our focus is not on force feeding you signals to trade. Even though we provide our members with signals, they're there for educational purposes only, to kind of show you what to look for. In other words, we kind of have the answers at the end of the book when you used to have an open book test in class, so that you can see if you were right or wrong, if you're going in the right direction. That's the only reason why we provide our members with signals. We're not a signal service. We don't tell our students what the perfect time frame is or the perfect market. All we do is provide our members with variables and different insights and ways in which to enter, to exit, different trading methodologies and strategies, and then let you decide how you want to apply them. Now, we don't just leave you in the dark. We work with you as your mentor. You can always email me and ask me questions, but we try to make it so that you feel comfortable, because that's the only way, in my opinion, you will be a consistent trader, by making your own decisions. And the only way traders can make their own decisions is if they're provided with the proper information. So that's what we do here. As you can see, my goal is not to force feed you signals. It's not to tell you what the perfect time frame is. I must get an email on a daily basis asking me, Steve, what's the best time frame or the best strategy to trade stocks or currency pairs? And I always say the best one is the one that makes you feel comfortable. There is no right or wrong answer. There is no best one. The best one is what works for you. I can trade something and it works fantastic for me, and then you go and trade the exact same methodology or strategy and you'll lose money. It's because we have two different temperaments. Maybe I like to trade 1,000,000 times a day. Maybe I only want to trade once a day. Maybe you like to trade 1,000,000 times a day. So there are different things that we bring to trading. Therefore, don't try to make the strategy or system fit you. Make the strategy and methodology work in conjunction with you to make you feel comfortable. So as you can see here, we are simply educators trying to teach you how to trade with a specialist edge. This is the same edge that turned my trading around some 40 years ago when I was struggling, probably unlike many of you today. I was struggling tremendously for a year or two, and the same things that I teach and that I mentor all of my students around the world are the same things that were taught to me. Now, since we are an educational company, I do like to take each and every one of your questions, but since we have a fairly good group here today, and I have a lot of information to share with you, if we stop like other webinars for every question, we may be here about 4 hours. So I don't want to keep you here that long. So please, if you have any questions, please wait till the very end. I see people are already asking questions, and please, I'll get to them at the very end of the class, okay? And that'll only be like in the next 30, 40 minutes, and then we'll reserve the last 10 or 15 minutes for any questions you have. So if you happen to join us late, like I said, we have a good crowd here today. Please wait till the end of class to ask any questions. The only question I will answer is the most common one, and that is this being recorded? Yes, it is. We record all of our presentations. So if you have to leave early, or if you're having technical difficulties, oftentimes if you just simply log off and log back on, they'll be corrected. But if not, Pro Trader Strategies will supply you with a link to this recording, okay? All right, so let's begin. First of all, we're going to be talking about straight up and straight down markets, which most people say they love, but in all actuality, they have a very difficult time taking advantage. So we'll ask the question, how do we take advantage of straight up or down markets? Well, here's what my mentors taught me, because I had a very difficult time as well. Even though I said, gosh, I wish the market would go straight down, I'm short everything. I would often get out too early, or I wouldn't know how to trade it once I was flat. Do I get back in? Do I simply wait? And then I'd just sit there and watch the market continue to go and go. So here's what my mentors taught me. They said, Steve, In order to trade straight up or straight down markets, we need a tool that translates what the market wants to do. You see, most of the time we're trading based off a tool or off some indicator or some mentor, some guy in a chat room who's telling us what they think the market's going to do. They're dictating where the market will go, how high it will go, how low it will go, where it will end, where it will stop, where it will begin, where it will reverse. And that's what I would say the majority of people trade off of, parameters based like this. But the majority of people don't actually listen to what the market wants to do on a tick-by-tick basis. So if we really just knew what the market wanted to do rather than listening to some guy on TV or some support and resistance lines that really show no consistency, well, maybe we'd get a little bit more consistency in our trading by simply listening to the source, the very thing we are trading. But how do we do that? Well, we need a tool that's not going to tell us how high or how low something goes, not going to tell us when the trend is reversing, not going to tell us when to buy or enter. It's just translating what the market wants to do, and then we can just decide how to trade that. Well, believe it or not, there is a tool. That tool is the PET D. Now, you've heard about me speak about this so many times before, and I'm not going to stop speaking about it because it is one of our most powerful tools we have at Specialist Trading. I use it every day. I was using it this morning. It made me money yesterday on the trades I made yesterday by simply using the PET D. This is how powerful this is. I have not stopped using this for roughly 4 decades now, and I will not stop talking about it because I really want to help you as traders. So for those of you who are not familiar with this, what exactly is the PET D? Well, first of all, let me tell you what it's not. It's not a system, okay? It doesn't come with some rules and tells you when to buy, when to sell. It's not a strategy. It doesn't do that either. It doesn't tell you how high a market's going to go. It doesn't tell you how low it will go. It doesn't tell you when, to get in, when to get out. It's simply a great tool that translates what the market wants to do on a tick-by-tick basis. That's all it's doing. It's just simply translating, because most people don't know how to listen to the market, myself included. When I first started, my mentor said, Steve, you have to listen to the market and not all these outside sources, like all these new subscription services you subscribe to, or all these gurus you listen to, or all these indicators you have on your screen. Don't listen to those things. And I said, well, I don't know how to listen to the market. So they taught me, and after I've learned, it's made all the difference. So what exactly is the PET D? It's a proprietary algorithm. When I was first taught this, I should say, when I first learned it 40 years ago, it was a formula. We used to call it the formula that we had to calculate by hand. And it's not really difficult. It's just cumbersome. It's something you have to constantly be on guard and making sure you're updating and being in charge of. So it's an algorithm that translates tick for tick what the market wants to do. But guess what? We've taken all the hard work out for you. Since it's proprietary, we've transferred it into a color bar tool. So all it does is it changes the colors of the bars. And when it changes the color of the bars, it tells you what it's wants to do. The green bars say it wants to go up. Red bars say it wants to go down at that very moment. Now, one of the best ways to apply this is as a signal confirmation tool. This means virtually any strategy, system, method, any technique you're trading, you can use the PET D to confirm it. So in other words, if you get a buy signal based off of, let's say, the full moon, we really don't care what it's based off of, or based off of the tides of the ocean, or, I'm just trying to pick something really off base just to show you that it makes no difference. The PET D just has to confirm it. If you get a buy signal, that bar should be green. If the full moon or the full tide system gives you a sell signal, well, that bar should be colored red. All right, so this is one of the standard ways for using it. But what we're going to be sharing with you today is its basic premise and technique as an early trend detector, because that's really what one of its main advantages is. It can tell the trend better than anything I've seen in 4 decades. And it tells you oftentimes, not guaranteed, but oftentimes well in advance before it appears as if a trend is even beginning. And that's the beauty of it, because it's simply translating on a tick-by-tick basis what the market wants to do. Okay, so here's an example here in Aetna. As we can see here in this chart, the stock's been going straight up. Most people will decide somewhere here in the latter portion, well, we are in a full-fledged uptrend. So based on your strategy, whatever it is, fundamental news, it could be indicators, you decide to get in somewhere around here and it's going pretty well. You're doing okay. You're in an uptrend. You figure, hey, I've always taught you trade in sync with the trend. But oftentimes this will happen. The trend will change on a dime. You're left holding the bag if you don't have a proper stop placement, or say you do, but you have a quick loss. It's very discouraging. So how can we know in advance, oftentimes, not guaranteed, but oftentimes when this trend will change? Well, there's nothing, as far as I know, in 40 years that will tell you at the very bottom when a trend is starting, at the very top when a trend is ending. But there are ways to find that out very early, and that's with the PET-D. For example, all we have to do, and this is an example on a new PTS Primo charting platform. As you can see, we have all our strategies, methods, and techniques in our green strategy tab right here. All you have to do is click on the PET-D and it automatically changes the colors, okay? So it's already pre-canned there for you. And as we tell you right here, as you can see, the beauty of the PET-D is that it tells you which direction you should be trading. And once you know that, you can apply virtually any strategy to that direction. So we knew well in advance, way back here, that we were in an uptrend, and we knew well before the downtrend really hit these bottoms here that we were going to be going lower up here. Okay, so let me share with you a technique for trading straight up or straight down markets with the PET-D. Now, I say technique, and I say that with emphasis because a technique is not the same as a strategy, and a technique is not the same as a system, okay? A technique is simply showing you some high probability area to enter or to exit. Okay, that's what a technique is. Where you decide to actually enter is based on your parameters. Where you decide to place your stop is based on your parameters. Where you decide to actually use money management or exit the trade is based on you. So those are all important pieces of the puzzle that you need to have a full-fledged trading plan. A technique is not a full-fledged trading plan. It's just showing you some highlighted high probability area for entry. So today's lesson is going to be on a very, very extremely high probability trading entry point using the PET-D. Okay, here's the setup. Obviously, we want to apply the PET-D, and we're applying it with a 3-bar pivot high or a 3-bar pivot low. So for those of you who aren't familiar with what that is, this is a 3-bar pivot high. You have 3 bars here, as you can see. Bar number 1 makes a high. Bar number 2 makes a higher high, and bar number 3 makes a lower high. So you have this kind of an arrowhead approach here, as you can see here. All right. What we want to do is apply the PET-D, and we want to see that once we apply the PET-D by simply clicking on our tab on our platform, that all 3 of those bars turn green. Okay. Each and every one of them has to be green. If you see that, well, you're going to buy 1 tick above the high of bar number 2. Okay. That's going to be your entry point. Now, you see here, I didn't say it has to close 1 tick above. Just if it trades 1 tick above, the minute it trades above the high of bar number 2, that's your entry point. Okay, and that's it. That's the technique. Where you place your stop, where you decide to exit, where you decide to apply money management, it's entirely up to you. That's why this is not a strategy. That's why I know a lot of you are going to say, well, Steve, where do I place my stop? Where do I get out of this? That's up to you. This is what techniques are, okay? Now, in our courses, we tell you exactly where to exit. We give you 3 or 4 different exit points, 3 or 4 different entry points, 3 or 4 different stop play. That's up to you, and then you decide. But in this free educational presentation, we're just showing you exactly how to spot these very highly probable points of entry with the PET-D. Now, the one other thing that we don't mention here is that, okay, so when you see this, you see the 3 bars, you go, okay, I'm going to simply wait. Now, if you see the next bar go lower and turn red, well, then all bets are off. You see, all the bars remaining until we get to the point where we trade above must be green. We don't want to see the color change. So that's the one thing involved in this technique that will give you a higher level of consistency. So all the bars until you enter must be green, okay? Now, the same thing will be if you want to go short. I'm not saying you have to short the stock, but a lot of people like to trade currency pairs or futures. You can short those contracts or trade options. So this is just telling you where to get in with the option. How you decide to trade the option, whether you want to buy puts, whether you want to buy a strategy, a spread, it's up to you, okay? But once again, a 3-bar low is, example here is you have bar number 1 making a low, bar number 2 makes a lower low, and then bar number 3 makes a higher low. So you have this type of a V here if you connect the dots. All right. What you want to do is simply click on the button and all 3 bars must be red. That's telling you that this 3-bar low here, short-term low, is in an overall downtrend, or a short-term downtrend, I should say. So that's telling you that if we trade, not close, but trade 1 tick below here, most likely we're going lower. So that's your point of entry. You want to sell 1 tick below there. And once again, while you're waiting to sell, while you're waiting for price to go below on the next bars that open up here, they must all be red as well. If we have the next bar red and then the one after that turned green and then it goes back down, this is not a valid technique entry. It's just been negated because one of the bars turned green. Okay, simple enough. Let's show you some examples now using this. Let's show you that first example we talked about. We took out the overbought oversold oscillator because we know there's no consistency in that in letter C. So let's now look at this, and once again we have the chart plotted on our platform. Let's simply click on PET D and look what happens. The bars automatically change color. Now here the bars are green, so we're looking for that 3-bar short-term top. There's nothing here. Now they turned red, so we're looking for that 3-bar short-term low. And here we have bar low, a lower low, and a higher low. So we're going to short if we trade 1 tick below here. But what's the only problem? The bars change colors. We changed the next bar, traded, and changed to green. So is that still a setup? No, it's negated because we changed the colors of the bars. So now that the bars are green, well, now we're looking to see if it's going to go higher. You see how we're just simply tracking and mirroring what the market wants to do? You see, we are in no way dictating that we're going to go higher. We are in no way dictating we're going to go lower. We're just simply following the market and saying, listen, whatever you want to do, we'll go with you. Just tell us what you want to do. And that's all you're doing. You see, this is how you become a consistent trader. Not by forcing your hand on it and telling it will stop right here. It's too overbought, it's too oversold, or it will only go up this high or only go up this low, or this is where the institutions are, so that's where the support is. There's no consistency in that. Take it from someone who's been using those things, who started using those things 40 years ago. And they didn't work for me then, so they're not about to start working now, 40 years later, in terms of consistency. So why not just follow the market, like follow the leader, whatever it's doing, that's what we're going to do, okay? That's really the secret to trading success, to just want to do what the market wants to do. If it wants to go higher, we're buyers. If it wants to go lower, we're sellers. So what do we have here? We changed to green, and guess what? We have our 3-bar pattern here. Bar number 1 makes a high, bar number 2 makes a higher high, bar number 3 makes a lower high. This is our 3-bar high here. So we know that we will go long if we trade, not close, but trade 1 tick above, and the remaining bars need to be colored green as well. So we were lucky because the very next bar traded there and it was green as well. Once we're in, we don't care what the colors are. Once we're in, you should have a plan of attack of where to exit, where to place your stop, and that's what takes precedence. The colors don't matter anymore. The colors were just telling us where to get in this particular technique, okay? Now there are other techniques we have which do rely and depend on what the colors are once you're in the trade. But in this particular one, no, that was just helping us deciding when to get in. So we're in the trade, and there you have it. Did we know it was going to go up this high? Absolutely not. We're just following what the market wants to do because the market tells us what it wants to do, usually in advance. But we're too busy listening to some guy on TV or waiting for the earnings to come out or waiting for the economic numbers because that's supposed to tell us what the market wants to do. Okay? Trust me, there's no consistency in that. I tried that 40 years ago. It didn't work for me. So I'm just trying to save you a lot of time and most especially a lot of money. Okay, so most people would say, boy, I paper traded this and gosh, that was a great buy, but you know what? I never got in. The beauty of this is when you have straight up or straight down markets, well, that gives you a lot of chances with this technique. For example, if we waited, well, we could have gotten in again and even one more time. So that's the beauty of straight up and down markets. They will give you a lot of chances to get in. All right, so let's look at some more market examples to get a better idea of just how to apply this. And remember, I know some of you are already Pet D customers and students of mine, and some of you are not, but please, as with all of our methods, we always request very strongly that you paper trade our techniques first. Most especially our techniques, because they don't come with full-fledged strategy points. In other words, we don't supply you with exits and stop placement. Those are things you have to come up with yourself, but that's good. That's what we encourage. We want you to define how you want to exit. We want you to define how to place your stop. We give you all the variables in our courses and all the different options and ideas to apply, but you have to decide, because if you don't feel comfortable, I mean, how many times have you bought a strategy or a system you've paid thousands of dollars for, and then the minute it gives you the rules, you go, oh, there's no way I can apply that. I can't take that much risk, or there's no way I can trade that many times a day to get those type of results. See, that's what we mean by you have to be comfortable in order to trade something. If you backtest any system, sure, it can look great on paper, but then once you have to actually trade it in the real world, it's very difficult because emotions and feelings get involved, and you may not be adequately qualified enough to pull the trigger because you don't feel comfortable. That's why we say you have to make your own decisions. We supply you with all the information, but ultimately you decide where you want to enter, you decide where you exit and place your stop. That's the only thing I've learned in 40 years that will make you a consistent trader, not by following or mocking and mimicking some other trader. It won't work. Okay, so let's look at this example in Textron right here. For example, we see that this stock was kind of slightly going higher, but how do we know what it's going to do? Well, we apply the Pet D, and we see here that we have a short-term low. So we would have gone short. We have 3 bars here. If we traded below, then we have another. Actually, it was a short-term low, but then we turned green. So we see that we're oscillating between green and red. So the market's basically telling you, if it's trading green, then red, then green, then red, the market's telling you it's indecisive. It doesn't know what it wants to do. So should you be following or trading anyone? Would you be following someone in a car if they didn't know where they were going? Well, that's the same way with the market. The market's telling you it doesn't know where it's going yet, so don't follow me. Don't do anything. That's a great way to save money. So many of us get involved when the market is in a range or whipsaw area and we don't know why we lost money. It's because the market hasn't decided what it wants to do. It only decides once it has a consecutive amount of the same color in its bars. And as you can see here, it did. It created that short-term top, 3-bar top. So this is what we're looking for right here. The remaining bars are still green, so we want to go long if we trade above there. But the bars have to remain green as we go back up. And as you can see, they did. We would have entered and 6 points in 3 weeks. All right. Did we know it was going to go? No, the market told us once it had consecutive green bars. Okay. Up until this point, it still was indecisive. It didn't know. And as we stated earlier, if you miss that, there's always more chances to get in. That's the beauty of knowing how to trade straight up and straight down markets. Now we see here in KSS, we have the 3-bar setup. Once again, all 3 bars are green. All right. While we were red, we never had that 3-bar setup. We had it here, but then we changed colors. So then the market's telling us, don't go short after all, because all of a sudden I'm changing my mind. I want to go up now. Okay. So now we're going to be buyers. We buy right here once we traded 1 tick above, and 8 points in the next month coming into October. And once again, a couple of more chances to get long in KSS. Let's look at GPC. All right. Now we were green all the way. We had a 3-bar low right here, as you can see, but we never went below that. And we changed colors. We're indecisive, but all of a sudden we formed the 3-bar top right here. 1, 2, 3. So we went long on this bar. That was green. And it was the next bar. 12 points in just 2 weeks. Now, did we have any idea that this stock was going to gap up like this? No. The only thing we did was follow the market. We're following someone in a car in front of us that knows where they want to go. So if they know where they want to go, we're going to get there as well, right? So that's all we're doing. We're following what the market wants to do. We're taking the market's lead. We're not using an overbought, oversold oscillator and saying it's overbought here, sell, it's oversold here, buy. Or we're not following institutions, so-called institutions that know where the support and resistance levels are. Trust me, I traded that way. I used to trade with the institutions on the floor. As a market maker in 50 stocks, I knew where the institutions' orders were. And there is no consistency in trading along with them, because many times they would create the support by putting in huge buy orders, and then a day later they would cancel that order. So what happened to the support? Well, there's no longer any support there, but on the chart, it looks like there's still a support. So it doesn't count to follow and rely on anything other than the market itself. And how do we know what the market wants to do? We use its translator, which is the PET-D. Now, RTN from July all the way to last week in October has been going straight up. But this is a very current chart here. Someone looking at this will say, boy, I wish I could have taken advantage of this, but I have no idea. My strategy didn't produce a buy signal, or maybe you got in and then you got out really quick and you took a quick point or two and then you said, boy, I would have loved to have gotten back in. How could I have taken advantage of this straight up market? Well, it's easy. You apply the PET-D and then you use our 3-bar pattern we talked about and look at all the buy setups you had. Okay, even though we had one red bar, that's okay. As long as we created another setup, we can get back in again. This stock has gone up 20 points in the last 3 months. So don't let anyone ever tell you that, boy, I really missed that one. I wish I would have known how to buy that. Why didn't any chat room I go to tell me to buy that? You don't need to rely on someone telling you what to do when you know how to listen to the market. Remember, save your money, save your time. Just listen to the chart in front of you. Let's look at letter R. Now, here's a perfect example of why a lot of people do not like to trade straight up markets. Myself included, when I first started, it was very difficult for me before I started trading with the PET-D, because I'd look at a chart like this and say, how can I buy this? It's already gone straight up, going about 7 or 8 points. And it's everything I've been taught and learned, it's too overbought. You've got to sell this. It's got to have a pullback. And all the indicators and all the volume and everything confirmed that this is too overbought. Well, what's the PET-D telling us? PET-D saying, I'm going to go higher. Until I give you 3 red bars, I'm going higher. So you can't listen to those outside voices telling you what it's going to do. Just listen to what the market says. And, where someone would say it's overbought, someone would also say it wants to go higher. So there's our 3-bar top there. You could have purchased on the next bar, and 7 points later it went even higher. So these so-called overbought, oversold scenarios show no consistency. Every once in a while they will work, but over time you'll have higher consistency if you just listen to the chart in front of you. All right, you can even apply this to ETFs. Here are the QQQs. Here's a weekly chart. All right, someone looking at this with Steve, there's no way I could have taken advantage of this. Okay, we were going up here, and this was in January. How would I have known we were going to go that high? Well, you apply the PET-D, and you see here that we were going higher. It was green. We have a 3-bar top, and there was your buy right there. So it was actually very simple. This was in at the end of January of this year that we knew we were going higher. Now, did we know how high the market was going to go? Absolutely not. But on a weekly basis, we had one of these setups telling us that the market is going higher. And as you can see, the QQQs have gained 22 points this past year coming into October. We had no idea it would go up this high, but why would you have tried to sell it? There's so many traders who like to be victims and say, boy, I had no idea this was going to go up this. It's because you rely on someone or something else to tell you how to trade. Once you put the power in your hands, you never have to be a victim again. You can sit here and go like, no, I saw that this was going higher. I'm the one who went along because I based it off everything I've learned by listening to the market. So I don't have to sit there and bang my head against the wall and say, how come the guy I follow didn't tell me that? He was telling me to sell this whole time. All right. Now, someone looking at this say, well, okay, Steve, that's okay, but I don't trade the QQQs, and 22 points in 10 months, that's okay, but it's not fantastic. Yes, but that 22 points transferred over into 3,000 Dow Jones points. So we're not saying you even have to trade the QQQs. You could have used this as a market directional tool. And if the QQQs are going higher, well, it's going to transfer over into the NASDAQ. That'll transfer over into the Dow. All right, so we looked at straight up markets. We can just simply reverse the rules and apply the same things to straight down markets. Let's look at this example in ASR. Someone looking at this would say, well, Steve, no direction. You say not to trade with no direction. And as I can see here, we're just simply going sideways. All right. Well, so far, so good. But remember, you haven't applied the PET-D because the PET-D tells you what it wants to do. We don't decide that there's no direction based off our own biases. We decide where the direction is based off what the market wants to do. So how do we know what the market wants to do? Well, once again, we click on the pet D, and the market is telling us the majority of these bars are red. So we want to go short. Here's our 3-bar pattern, okay? So we will sell 1 tick below that. Here's our sell right there. This was just a few weeks ago in September. ASR dropped 14 points in 2 weeks. Did we know it was going to drop that far and that quickly? No, we're just following the market. Now, you had 14 points to work with. We're not telling you that you would have made 14 points. Many of you may have made just 1 point trading options or so and gotten out. Some of you would still be in the trade. It's up to you. We're not going to decide for you. We are not a signal service. Let's look at WBA. Okay, now we were originally green, so the market was saying, I want to go higher. We have our 3-bar pattern here, but we never went above. Once we changed to all red, the market is now saying, you know what, I want to go lower. Okay, we're not attached to anything. We'll do whatever you want to do. So if you want to go lower, we're going to sell. But we can only sell if we see this 3-bar pattern, which we have here, and all the bars must remain red as we go lower, which it did. So we got short and another 5 points coming into this past week to the downside. Okay, this is how simple it is when you learn how to listen to the market. Let's look at Pepsi here. All right, someone looking at this would say, well, Steve, once again, we're just in a trend direction. We're not going anywhere. A sideways direction, I should say. This is how you get whipsawed. Well, remember I told you about how what we're looking for is consistency in the markets. Consistency means from every once in a while you will have a losing trade, but you need a method that has the ability and the capability to make it back as soon as possible. Well, let me show you what happened here in Pepsi. Once we click on the pet D, all the bars change color, and the majority, once again, are red. Now, if we look here at the very beginning, this was at the end of August, we had a 3-bar low here. All were red, 1, 2, 3. And on the very next bar, we traded below, okay? Let's just say we placed our stop somewhere up here, okay? If we had placed our stop up here above this bar, or maybe close to this bar, well, we would have had, obviously, a loss because we went higher. And let's say we lost 1.5, 2 points at the most, okay? Let's just say 1.5 points. Okay, that's all right. That's perfectly admissible. We will have some losses with this technique every once in a while. We just get back on the horse because the market is always moving. It's like a river. You know, just because you fell out of the boat doesn't mean you can't get back on again and go down the river. So you have to get back on. So the river goes up a little bit. The bars are green, and then it starts to go back down. So now it's decided that it wants to go lower again. We have our 3-bar pattern low right here. All the bars must be red, and they are. So we go short once again, and this time it kicks in and we make 5 points. So basically we lost 1.5, but we made back 5. So that's what consistency means. Every once in a while you will have a small loss, but you'll be able to make it back and hopefully make some more the way we just did. You just have to be diligent and continue to trade, okay? Now let's look at this example here in DXCM. Same exact thing, okay? Now we had a setup here in the beginning to middle of September, a 3-bar low. But where this differentiated with Pepsi is that we never got short. Why? Because the colors changed. So that was telling us we're not going to take that setup. Even though it decided to go lower, that's okay. We'll wait for a valid setup. So we wait for another one, and we get another one right here. Okay, 3-bar low, and all the bars are still red, and this one was red. So we got short. Okay, so now we're short. Let's say you placed your stop somewhere up here or so, okay? DXCM fell 25 points in 2 days. Now, obviously, some news came out that caused that to go lower. There was no possible way that anyone from the company called us up and told us to go short. There was no way we knew anything about this company other than looking at the red bars. I still have no idea what this company does, but this was a setup using this particular technique. There's no reason to follow the fundamental news of a company or the earnings or whatever, because that's great for investing. But in my 40 years of trading, if you're holding on to positions for weeks or months, there's no reason to overcomplicate your trading. Now, if you want to, if you feel you have to, that's fine. But it's not required at all. Keep things simple by just learning how to listen to the market, throw away all that other useless noise, what my mentors used to call, and you'll be a consistent trader, okay? Okay, so before we go to questions and answers, let's recap. Remember, In order to use this technique, you need to apply that 3-bar pivot high if you're going long, or the 3-bar pivot low if you're going short. And at the same time, you need to apply the PET D, because this works fantastically with the PET D. Many times, a lot of students will say, well, Steve, what do I need the PET D for? I'll just look for this particular 3-bar pivot high or low. And if we're in a downtrend, I'll know we're in a downtrend. A short-term uptrend, I'll know that, okay? Well, sure, that may work using standard conventional tools, but every once in a while, you'll miss those great signals where the PET D can get you in far earlier than standard conventional trend detectors. So I can't say it enough how great of a tool this is. Now, extremely important points to remember. This is not a complete strategy. I talked about this earlier. A complete strategy comes with a set of rules. It's rule-based. It tells you exactly where you enter. It tells you exactly where to exit, exactly where to place your stop, and exactly how to manage the trade with money management. We didn't talk about any of those things today. We give you a point of reference of where to enter, but you should have different variables, different options if you're more conservative, more aggressive trader. So we didn't talk about entries, we didn't talk about stop placement, we didn't talk about exit signals, and most especially and most importantly, we didn't say anything about managing the trade. Okay? These are all extremely important pieces of the puzzle. The good news is we teach you those things in our courses. As we close here, and before you ask me questions, I'd actually like to ask you a question. Ask yourself this, and ask yourself this honestly. 2017 is nearly over. We only have a couple more months, basically. Do you think these edges could have helped your trading this past year? Go back and look at your last 10, 20 trades. I can almost guarantee you that most of your losses were because you were basing them off of convoluted indicators or news events that really show no consistency. But were they based on listening to the market, what the market wanted to do? Most people don't trade that way, myself included, when I first started 40 years ago, because no one had ever taught me. I was always taught to listen to what the institutions are doing, always taught to look at the volume or the support and resistance or the Fibonacci levels, and there's no consistency in those methods. Sure, there are some traders that are able to make consistent money trading those things, but they're probably about 5% of all traders. Okay, that's a very small amount of traders. The 95 percentile, which includes myself, have a very difficult time trading that way. So why don't we just trade the easy and consistent way by learning how to listen to the market? Now, here's a great attendees discount we have for all of you in the webinar today. Here's our special attendee discount. We're going to be offering you the PET D. This is our Primo Early Trend Detector. We call it our roadmap for virtually any market. I've shown you examples of straight up markets, straight down markets. It works virtually any market, any time frame. Now this includes the add-on that automatically colors the bars either green or red. In this course, we give you 2 continuation trading techniques as well as 2 pullback trading techniques. Remember, a technique is not a full-fledged strategy because the PET D is not a system or a strategy. It's simply a trend detector. We also share with you a trailing stop technique, so you can pick and choose amongst all these techniques of how you want to apply it. Remember, it applies to any market, any strategy, and any time frame. I know a lot of you said, Steve, this is great, but I don't trade stocks, and all you showed today are stocks. You're right. How about this 15-minute chart of the E-mini, okay? Now, this is a 15-minute time frame. Someone looking at this would say, boy, I would have loved to have been long this. How would I have known the E-mini was going to go up like this on a 15-minute time frame? Well, it's simple. You apply the PET D, and we knew well back in advance, back here, that we were going higher, okay? You apply the same technique, and look at all the entry points. And this was 10 points in just a couple of hours, or $500 per contract. If you have 1 contract, that's $500 by the end of the day. If you have 10 contracts, $5,000 by the end of the day. Were you looking at news? Did you have to look at support and resistance levels? Did you have to listen to some guy in a chat room? No. You were in charge because you were listening to the market. That's the only thing you do when you use the PET D. You listen to what the market wants to do. How about Forex traders? Here's a chart of the Canadian dollar. Once again, someone looking at this will say, boy, I've been long the Canadian dollar this entire time. I should have been short, or at least out of this. How would I have known it was going to go down so far? Well, we don't know how far it's going to go, but we did tell you with the PET D that it was going lower well in advance back in June. All these bars were red and continue to be red. And if you wanted to take advantage of the downside, remember this presentation is how to take advantage of straight up and straight down markets as we see here. Well, you apply that 3-bar pivot low again. And had you taken the first setup, that's 800 pips in your favor, or $8,000 per contract. So we're offering you the PET D that shares with you this technique, as well as trailing stop and other techniques as well. Remember our roadmap for any market. We just showed you currency pairs, futures, and stocks, and different time frames. But we're not going to stop there. We're also going to throw in something we're extremely proud of that is very, very new. It's our new PTS Primo charts. I've developed this with Pro Trader Strategies, and it's my 40 years of different strategies and techniques all in one spot. It's the trading educational portal you've been searching for. Now, with this comes so many different things included with the offer. You're going to get our enhanced buy sell line. That's a particular method that I talk about many times in the webinars. I won't go into detail now, but tells you the overall trend. You see, the PET D shares with you the short-term trend. The PET D tells you the overall trend. Now you have the overall and the short-term trend in sync with each other. We're also going to throw in a trading strategy, strategy 3A. This is a great strategy for capturing these very, very strong up and down trending markets. This comes complete with entry, exit, stop placement, and money management. We're also throwing in the signal scanner. So if you're not able to be in front of your computer all day, you can be able to scan at night to see where the signals are for the next day. Included in this, we're giving you 2 great entry techniques. These are our steps feature. These are 2 proprietary entry techniques. So if you have a strategy or a system that you already trade with, but the entry is just not that good or faulty, it's getting you in too early or too late, simply click on the steps tab and it will show you the high probability point for entry after a signal has been generated. Now, if you like to tinker under the hood, we also provide you with over 90 technical indicators, all the standard basic indicators that you've always seen on trading platforms. Now, we know we have kind of a technical bias here because most of our information is based off of information you see on a chart. But if you like fundamental information, fundamental news, and you want to be able to listen to that, we've also provided you with a free media page where you get free Bloomberg TV. So this is live. You can open up another page on the platform where you can see live news reports, fundamental news, economic reports coming out as they happen. And lastly, this comes with personalized tech support. We know that some people have issues, they can't load a chart correctly, or they're not getting everything the way they saw it on the presentation. Our tech support will help you with that immediately and help you understand exactly what you may be doing wrong or how to alleviate the problem. Now, this would normally cost you for over $500, close to $1,500 to get this real time for 3 months. Well, we're giving you 3 months for free, totally free, included with this PET D package. Okay. So now, if we added all this together, the PET D with 3 months of real time with the PTS Primo charts, where all those different variables included, this would be thousands and thousands and thousands of dollars, close to $6,000, $7,000. Well, our roadmap for any market included with 3 months of the PET D is only being discounted down to $29.95. So that's all you have to come up with. But you can also have a payment plan. So if you can't come up with $29.95, they will structure Pro Trader Strategies a payment plan so that you can have a small deposit and still be up and running with all this information. That's the PET D application course, 3 months of the real-time platform for only $29.95. This is a great, great offer. Remember, we're almost at the end of 2017. Isn't it about time you got your trading back on track? These are things I use on a daily basis. Here's how to take advantage of this. All right, contact my sister site, Pro Trader Strategies. You can email them at trading@protraderstrategies.com, or if you see on the very bottom, that's the link that will take you to the sign-up page for that great, great offer, but that's not a live link. The live link is on the chat box on the far right-hand corner of the GoToWebinar page. I would suggest, just personally, just a suggestion, that you set up a payment plan. So if you can't come up with $29.95, don't worry. You can still come up with a small deposit, and you can be up and running with a payment plan. But you have to contact Pro Trader Strategies. You can ask them any question. There's no obligation at all. But the best thing, in my opinion, is to call one of their trading consultants at 310-598-6677. This is a great, great offer. I'll be your personal mentor the whole way. This is not something like some other webinars do where they throw you to the wolves and say, good luck, you now spent $10,000, best of luck. No, I'll be there with you every step of the way. I answer most of the emails within 24 hours. I do my best to answer all of them as quickly as possible. And you're there with me every step of the way, okay? So I'm going to leave all this information up. So if you want to copy down the phone number. Remember, the live link is on the chat box, though, on the far right-hand corner. And I'm going to open up the question and answer box. I want to thank you all for holding off on any question. Jake, hi Jake. Jake asks, can I use a short-term period such as a 5-minute? Sure you can, Jake. I use it on tick charts, just to let you know. Okay, so if a tick chart, which is much more aggressive than a 5-minute chart, it works fine for me on tick charts. So sure, 5-minute chart. We have some students that use it on 1-minute bars. We have a lot of students that like to use this technique with forex currency pairs because they trend so well. It's up to you, though. There is no one right or wrong way. We can just give you suggestions, but ultimately you have to make your own distinction as to how you want to trade it. Gustavo asks, can you repeat the rule to buy? I'm not sure I understood it. Well, Gustavo, I can't backtrack because backtrack. Remember, this is being recorded, but you're looking for a 3-bar pivot high. Okay, all 3 of those bars need to be colored green. And you're going to buy once price trades 1 tick above that highest bar in the 3 bars, okay? It's a short-term pivot high, and you're buying when price trades 1 tick above. I would suggest, if you didn't really fully understand this, to request a link to the recording and watch it over and over again. But remember, you must take advantage of this deal, which is only going to last for the next couple of days, because it may go back up to like possibly $8,000 with the real-time charts thrown in. And you would hate to throw away a great offer such as we're offering today in today's presentation. If you're new to my presentations, we offer different things each week. So just because we offer something this week doesn't mean it's going to be this next discount for the next week. So take advantage of these as soon as you find something that really meets your needs, okay? Now, as I stated, I use the PET-D on a daily basis. This is a great technique that doesn't take a lot of work. It's easy to figure out. I'm there with you every step of the way. If you're serious about turning your trading around, this is a great offer, okay? And one of the best things about this is that with the PTS charts, there's nothing you have to like upload onto your Metastock or upload onto Thinkorswim or whatever. It's all right there. That's why we designed it. We knew that a lot of people said, well, Steve, I'm not sure exactly how to apply it on my software. I use a different platform, and then someone else uses something else, and someone else uses something else. So we said, listen, let's just have one-stop shopping. Let's put it all on one platform so it's easy for all of our customers around the world. All they have to do is click on whatever they want to use. If you want to see the PET-D, you just click that, and all the colors are changed to the PET-D colors. If you want to see a strategy, you click on that, and you can see the arrows where all the signals are generated. It's that simple. You want to see the media, you want to see the Bloomberg live TV, you click on media page, and it automatically comes up for you. There's nothing you have to do. So this is the beauty of the PTS Primo chart. You get a great deal with the PET-D along with our new platform. It's one-stop shopping. It's great. We're really proud of this. Took me and Pro Trader Strategies years to develop, but we're extremely happy with it. And most of our customers really love it as well. So this is a great deal. I'll be there with you every step of the way. Contact Pro Trader Strategies. They can set up a payment plan for you, and you can be up and running as soon as today if you'd like, okay? So in conclusion, I hope you got something out of this. I'm sure you can see our sense of detail and how much we really want to help you. I'm sure you can see how much we really are more focused on teaching you than just saying, well, look how well this works. I know you have no idea what it's based off of, but just spend 10,000 and you'll figure it out. No, we don't believe in that. We want to teach you something each and every time. If you wanted to use this method, you could start using it today if you like. You just have to make sure that you feel confident that you really know what the trend is. But I've researched this for the past 40 years, and it works extremely well with the PET-D, okay? Another one of our students, Pip, brand new students, has the charts. She says they rock. She says she loves the mentoring by email. Thank you, Pip. She's a great student. She just started with us. She's in our courses, and she's happy with what she has so far, so we're looking forward to giving her more information. So please, if you want more information, there's no obligation at all. Contact Pro Trader Strategies. They'd be happy to answer any question you may have. But remember, you have to take advantage of this great discount before it goes back up to the regular prices, okay? In conclusion, thank you so much for attending today. Thanks for taking time out of your afternoon. I look forward to all of you becoming students of our courses, especially our Pet D course, but most especially, I look forward to all of you becoming students of mine at Specialist Training and Pro Trader Strategies. Thank you so much for attending today. I hope to see you in class. Bye-bye.